Hello everyone and welcome to today's session. So today we are going to continue the chapter number 9. Like we will take some questions and then we will start chapter number 10. So before I proceed to the chapter number 9, any doubts till now? Any doubts? Okay. If no doubts, then let's proceed to the questions that we wanted. We will be solving today for the chapter number 9 and then we will start the chapter 10. Okay. Basically here the questions that we are discussing will be of nature that it will enhance your understanding on the SRS 4400 and 4410. Okay, so let's see. The question is, ABC Limited has engaged you, a charter accountant, to perform agreed upon procedures on their account receivables as on 31st December 2023. The engagement letter clearly outlines the specific procedures to be performed, such as confirming balances with customer, verifying aging schedules, reconciling subsidiary ledgers to the general ledgers. After completing the AUP, you prepare a report detailing your findings, including some discrepancies in the customer balances and minor aging classification errors. The management of ABC Limited has, having received your report, is now requesting you to add a statement to the effect that the procedures performed to provide limited assurance on the accuracy of the account receivable balances. As per SRS 4400, how should you respond to the management request? So take a minute, read the question again, and then try to answer. Like what management is asking and what can you do? So I'll give you a minute to read once again and then answer. Yes. So what is the answer? What do you think? Should you agree to the management's request or should you reject the management's request? What should be your approach? Is it fine to agree the management's request? Yes, no? Basically, see, what is the purpose of SRS 4400 that we have discussed in the last session also? SRS 4400 or the engagements which are in the nature of agreed upon procedures. Okay, these engagement basically what they are for, basically they are some procedures that we need to perform. Okay, but at the end we are not providing any assurance. In last lecture we multiple times discussed this particular point that in agreed upon procedures we do not provide any kind of assurance. We do not provide. So adding a statement that these procedures performed provide limited assurance is incorrect, is totally incorrect. You are not going to provide any kind of assurance when it is an agreed upon procedure engagement. Otherwise, it will change the nature of engagement. You have to sign another engagement letter. You need to get them agreed with the terms of engagement as per that particular engagement. And then you need to, issue report under separate engagement, but not under this one. Are you getting the point? So if management is asking you that please add the word that okay, these procedures provide some kind of limited assurance, then you should straight away reject it. Straight away. Okay. Okay. Now, what is the second question? What are the key elements that you must include in your report to comply with SRS 4400 regarding the expression of assurance? Now, can anyone tell me what are the specific elements that we need to include in our report with respect to assurance point? There were 2 to 3 paragraphs that we discussed. Which were those paragraphs? Anyone? Which were the paragraphs that we are required to add in our report with respect to the assurance related points? Pretty easy, that we have discussed in the last session. Okay, I'll tell you. See, when it comes to the report, as we discussed just now, okay, we are required to add paragraphs related to number one, that this is not, these kind of procedures do not provide any assurance. Okay, so these procedures do not provide any assurance. So a statement that the procedures do not constitute either an audit or review, and such no assurance is expressed. Second, a statement that the auditor, if auditor had performed additional procedures like an audit or a review, other matters might have come to the light that would have been reported. Third, a statement that the report is restricted to those parties that have agreed to the procedures to be performed. And fourth is a statement that the reports relate only to the elements, accounts, items, or financial, non-financial data that is specified specifically in this report, and they do not extend to any of other area. For example, in this case, the item account is accounts receivable. So the report on agreed upon procedure is only restricted to account receivables. It does not extend to any other area. So these are the statements that you must include in your report to comply with SRS 4400 regarding expression of assurance. Clear? Any doubt? I hope you got the point that what is required to be included in your report. Okay. Let us see one more question on similar lines. XYZ Bank has extended a significant loan to PQR Industries. As a condition of the loan, the bank requires an independent assessment of PQR's inventory valuation as on 31st March 2024. You, a chartered accountant, are engaged to perform agreed upon procedures on the inventory valuation. The procedure includes physically verifying a sample of inventory items, comparing recorded cost to the recent purchase invoices, and evaluating the company's subsistence policy. Upon completion of the procedure, you prepared a detailed report presenting your factual findings. The report includes instances where physical count differed from the recorded quantities and the cases where the recorded cost exceeded the current market value. PQR Industries, eager to demonstrate a strong financial position to XYZ Bank, ask you to modify your report to state that the inventory valuation is fairly stated based on the procedures performed. In accordance with SRS 4400, how would you address the client's request? Take a minute, read the question again, and then try to answer. Come on, guys. So, Would you accept this request or not? Yes, no. Can you accept this request, management's request? And the reason also, I want answer with the reason. Very good, Ginny. And what is the reason? Anyone? No? Okay. As we just now discussed that including the words, for example, fairly stated, true and fair, is kind of an assurance. When it comes to the agreed upon procedure, we cannot provide any kind of assurance. We cannot. As a result, if we include such words, if we include any such kind of detail in our report, then it would be misleading. It would not be correct on our part. Reason because we here are not we are not going to issue any opinion. No, it is just the procedures and the factual findings of the procedure, nothing else. So we are here only providing factual findings, whatever actual it is, nothing else. Okay, that's why such kind of request cannot be accepted. Clear with this? Any doubts? Any doubts? No? Okay. Now, can anyone tell me? So, apart from, okay, let's extend this particular question for a time being. Okay, let's extend this question. Now, instead of the word fairly stated, if management asks you to include the word like in all material respect, okay, inventory valuation is proper. Instead of fairly stated, they are asking us you to this, state this is proper in all material respect. Now tell me, would you accept this? Yes or no? Yes, no. So I removed the word true and fair or fairly stated. We are not adding the word fairly stated, true and fair kind of things. So now can you accept the request? Yes, no, anything? No? Okay. So see, the word not only true and fair or fairly stated, but the words like in all material respect, okay, in all material terms, such kinds of words should be avoided because these represent an kind of the assurance. That's why it is necessary we should avoid these kind of statements and words in our report. Clear? So not only the word fairly stated, but proper in all material respect or appropriate in all material respect, all these kinds of words should be avoided. Okay. Now, let's say, for example, So I'll not go to the number two, but let's say for we go to number three, another question that management ask you to include key audit matters paragraph in this report. How should you address this request? How should you address this request? So management has asked you to include a key audit matter paragraph in the AUP report. Now, are you going to accept this particular request? Yes, no, not that much difficult, I would say. Pretty much straightforward. Absolutely correct. Yes, Pooja. Yes, Jenny. We cannot. The paragraph you see key audit matter paragraph. It in the name itself has audit. How can we include key audit matter paragraph when we are not performing any audit? So key audit matter paragraph should be involved or should be included only when there is a audit. Otherwise, or we will see with respect to other standards also, but not not for the agreed upon procedures. Reason because in agreed upon procedures there is not such any area like key audit area. That's why you should not be including this particular paragraph in your report. Clear with this? Any doubt? Any doubt? Okay. If no further doubts, let's proceed further to the next question. So the question is again straightforward. It is not that much difficult. You, a chartered accountant, were engaged by DEF Holdings to perform agreed upon procedures on their payroll data for the quarter ended September 30, 2023. The engagement letter specified the procedures, which included verifying employee data against HR records, recalculating gross and net pay for the sample of employees, and testing compliances with applicable tax regulations. Your procedures identified minor errors in data entry and a few instances where overtime calculations were incorrect. You prepared a comprehensive report detailing your findings and submitted to DEF Holdings. A few days later, DEF Holdings contacts you and express concern that your report may not be sufficient for their internal audit committee. They request you to remove the disclaimer statement indicating that the additional procedures, had they be performed, might have revealed other matters. They argue that this statement creates unnecessary doubt about the adequacy of your work. As per SRS 4400, how should you respond to DEF Holdings request? Take a minute, read the question again, and then tell me. Come on, guys. Take a minute, read the question again, and then tell me. Okay, now tell me, do you think that we should remove the statement? Yes, no? Should we remove the statement?
No, sir.
Okay, and the rationale behind?
Because the standard itself require us, if the service provider or the say chartered accountant is coming across such thing where he believe that if certain additional procedures are performed, then something else could have been the opinion. They have to report it.
Yes, very good. Very good. So basically what happens is, see, in agreed upon procedures, we only perform procedures that are agreed. We do not perform all of the procedures that are required to be performed under audit or under review. Now, if we see, as I said, that we do not perform all the procedures. So there is a chance that if we perform rest of the procedures that we are currently not performing. So if we perform rest of the procedures that we are currently not performing, in that case, there is a chance that we might find something else. We might find something which is a misstatement or some frauds. We do not know because we have not performed those procedures. We have only performed agreed upon procedures. They are not the all procedures that we perform in an audit. As a result, it is necessary to have a statement that if additional procedures would have been performed, okay, in that case, there was a chance that, we might have identified something additional. So that's why we add this particular statement, and this is necessary to demonstrate what is our finding and based on what. So we cannot accept management's request. This particular statement will be there. Will be there. Remember, I last time when I discussed AUP draft, this was the draft report. Over there, we had this particular statement. See, had we performed additional procedures, or had we performed an audit or review of financial statements in accordance with the generally accepted auditing standards in India, other matters might have come to our attention that we would have reported to you. This is the sentence that management is asking to remove, and we cannot. No. Clear with this? Any doubts? No? Okay. That was your question, and answer is we cannot. Then coming to the next question, again, very good question that we have. Very good question. LMN Corporation, sorry, LMN Corporation, a publicly traded company, is planning to issue new shares to raise capital to provide potential investors with additional information. They engage you, a chartered accountant, to perform agreed upon procedures on their revenue recognition practices for the year ended 31st December 2023. The engagement letter specifies the procedures, including testing a sample of sale transaction, reviewing contracts for revenue recognition terms, and assessing elements adherence to the accounting standards. Upon completion of the procedures, your report details your findings, including a few instances of early revenue recognition and some inconsistencies in contract interpretation. However, you do not identify any material misstatement related to the revenue recognition. Element Corporation plans to include your report in their prospectus for the new share issuance. However, they are concerned that the statement limiting the report scope to the revenue recognition might deter potential investors. They request you to remove or modify this statement to imply that your procedures cover the entire financial statement. So, would you agree to this particular request? Yes or no? Should you agree to this request?
No, sir.
No? Okay, very good. Yes, we should not agree to this particular request. Reason because this request again will dilute your report. Okay, as of now, we have issued our report which is for specific purpose, and we cannot dilute our report. No, we cannot say that our report is for all the other items. We have to include the statement that the report relates only to the elements, accounts, items, or financial or non-financial information that is specified in the report, and it does not extend to the entity's financial statement. Simple. Otherwise, it would be misleading. That's why we cannot remove the statement. Clear? Any doubt? No? Okay. No issues. Let's proceed further. So now these were the questions based on your SRS 4400. Okay. Now there is one more question that I would like to take, which is you, a chartered accountant, were engaged by OPQ Limited to compile their financial statement for the year ended 31st March 2024. During the compilation process, you discovered that the OPQ Limited had not recorded a significant provision for doubtful debts, despite evidence suggesting a deteriorating financial condition of some of the major customers. You communicated your concerns to the management, recommending that they should recognize the provision in accordance with the applicable accounting standards. However, management strongly disagreed, arguing that the provision was unnecessary and would negatively impact their financial results. They instructed you to proceed with compiling the financial statement without the provision. As per SRS 4410, how should you respond to the management's refusal to amend the compiled financial information? Take a minute, read the question again, and then try to answer. So tell me, will you accept, or what you will do in this particular scenario? What you will do in this particular scenario when management is not accepting the amendment? What you would do? No? Okay. Practitioner shall withdraw from the engagement. Very good, Ginny. Yes. Remember in the last session, we discussed three different scenarios where the practitioner, if no other choice is remaining, has to withdraw from the engagement. Can anyone recall those three scenarios that we discussed in the last session? where the practitioner can withdraw if no other choice is available. Which were those three scenarios? Come on, guys. Okay, I'll tell you. Basically, when we discussed SRS 4410, we discussed three specific scenarios wherein if the compiled financial information does not adequately refer to the described applicable financial reporting framework, or amendments to the compiled financial information are required for financial information not to be misleading, materially misstated. And third one was the compiled financial information is otherwise misleading. So in second number point, that is the amendments required for the financial information not to be materially misstated. We have to require a bad debt provision. Otherwise, it will be materially misstated. And we need to ask management to amend the financial statement. If management does not amend, report to those charged with governance or communicate to those charged with governance. If they do not agree, provide them in writing the reasons for resignation, okay, reasons for resigning, and then resign or withdraw from the engagement. So inform the management and those charged with governance of the reasons for withdrawing, and then withdraw from the engagement. Okay, if management declines or does not permit the practitioner to make the proposed amendment to the compiled financial information. Are you getting the point? So in this case also, if management does not agree or does not allow you to make these changes, if management if management is refusing to make amendments, no other option available, then withdraw from the engagement and provide reasons in writing why you are withdrawing from the engagement. Clear? Any doubt with this? Any doubt? No? Okay. If no further doubts, so I'll ask any doubt with respect to chapter number 9. Any doubt? Whatever we have discussed yesterday, not only related to the questions, but related to the any of the topic of chapter 9 or previous topic, you can ask freely. No issues in that. You can ask freely any of the doubt. Okay. If no further doubts, then let's proceed to chapter number 10. Chapter number 10 basically is on review of financial information. Remember, in chapter number 9, we discussed something related to this particular part. I'll go to chapter number 9 again. Remember, I mentioned other standards when it comes to the review. So, for example, here, when we were discussing SRS 4410, at that point in time, I specifically says that, okay, this is with respect to the historical financial information, and we are assisting the management without obtaining any assurance. If it was a review of, financial information, it could be, compilation of pro forma financial information, could be examination of prospective financial information, or could be a review of interim financial information or historical financial information. In that case, there is a separate standard for that. Now, when we come to chapter number 10, we are talking about those reviews. Okay. We are talking about basically review of financial information. Now, it can be historical financial information, it can be interim financial information. Can anyone tell me the difference between a review and an audit? What is the difference between a review and an audit? Anyone? Difference between review and audit. Even when we were discussing our chapter number 9, okay, at that point in time, we discussed one another specific point. That is, when we are preparing a report, we have to include a paragraph. In our report, we have to include a paragraph that we just now discussed. That I'll go to that paragraph to show you. Okay, here. That if, okay, if additional procedures would have performed. Now, this important point regarding an audit or a review. Okay, had the auditor performed additional procedures, an audit or a review, other matters might have come to the light that it would have been reported. See, here we are distinguishing between audit or a review. Audit we have seen till now. Audit we have gone through various standards till now. It's time to focus on review. It's time now to understand what is review and how it is different from audit. Okay, so can anyone tell me what is the review mean? What review includes? When I talk about review of financial information, how it is different from the audit of financial information? Anyone? No? Okay.
So,
Yes.
I think in case of audit, auditor is concerned about overall financial statement, and in that case, if we find anything doubtful or anything, he can perform additional further procedures till the end and can conclude finally upon the financial statement. But in case of review, the auditor is performing only inquiry procedure or performing some analytical procedure just to confirm whether there is any misstatement or not.
Yes, very good. Very good. Anyone else? Okay. No? Okay. Yes, Jenny, very good. So, to summarize, like what you said, Pooja and Jenny, basically, when it comes to the audit, audit is with respect to enhancement of the degree of the confidence, but by providing or by obtaining assurance which is a reasonable level. So when I talk about audit, it is obtaining reasonable assurance. So the practitioners or the auditor's conclusion, okay, in case of audit, is kind of, he's obtaining reasonable assurance that, the financial statement in all material respects comply with the either, whatever generally accepted accounting principles are there or the financial reporting framework is there. But at the end, we are saying, yes, in all material respects, I am providing you reasonable assurance. But when a review comes, review is not about a reasonable assurance, rather, it is a limited assurance. Okay. And that I would explain you with an example. Okay. We will see a report basically. Again, it is a review report. We will see a review report and we will see the wordings as of now of one specific paragraph that will make us understand how it is different from the audit wordings. I would request everyone not to focus on the name of the company. It is publicly available data, so do not focus on the name of company. If you see the last paragraph, based on our review conducted as above, nothing has come to our attention that causes us to believe that the accompanying statement prepared in accordance with the recognition and management principles and other accounting principles generally accepted in India has not disclosed the information required to be disclosed in accordance with the requirements, including the manner in which it is to be disclosed or that it contains any material misstatement. Now, can someone tell me what is the difference here in this statement? How this statement is different than the statement we have in audit? The
In case of
statement,
audit,
yes,
in
yes.
case of audit, the statement we write is something like we have obtained sufficient and appropriate evidence to say that they are providing reasonable assurance for the true and fair view of the financial statement. Whereas in this current scenario, they are just saying that nothing has come to their attention and they do not have any reason to believe that something is there.
Yes. So we call this kind of statement something. So there is a specific term that we use. Anyone? No? Okay. Basically, if you see this particular statement over here, okay, that we are writing or that we are providing about, the outcome, can you say this is kind of a negative statement? And, kind of a negative assurance, something that if that we say nothing has come to our attention, unlike the positive assurance that we were giving in the audit. Are you getting the difference between both?
Yes, sir.
So one particular statement is in negative terms or negative tones, you can say, kind of a negative assurance. Another particular statement, which is in audit, it is kind of a positive assurance. Basically, that we are saying that, okay, based on our, procedures, based on our evidence, based on the information that we have obtained, financial statement do comply. And here what we are saying is that we performed our procedures, but nothing has came to our attention. So we assume that everything is fine. That is we call a limited assurance. That because something did not appear or did not come to our attention, because something we were not able to identify any misstatement, we assume here that everything is fine. Okay, so the assumption that everything is fine based on that we have not identified anything is limited assurance. So when it comes to the review, we talk about limited assurance. Throughout the chapter, wherever we will refer about review, we are talking about limited assurance. Okay? Clear with this? Yes, no? Okay. Now tell me, do you think SQC1 will apply to limited reviews or review of financial information engagements?
Yes, sir. It will apply.
Yes. So irrespective, see, remember last time when we discussed about SQC1 in the last lecture, we discussed that SQC1 is even applicable to agreed upon procedures. Then how it can scope out the review of financial information? So SQC1 is also applicable here. Okay. Now, there are two particular standards that we will be covering in review of financial information. Number one is SRE 2400 and second is SRE 2410. Now, what is this SRE? Basically, when I talk about SRE, these are the standards with respect to review engagements. So, standards on review engagement is SRE. And standard on review engagement 2400 talks about review engagement to review historical financial information. And 2410 talks about review of interim financial information performed by independent auditor of the entity. So the report that we just now saw was the interim financial statements, which were performed by the independent auditor. Okay, it was the standalone unaudited quarterly financial statement, which is again interim financial statements. So review of interim financial statement performed by independent auditor will be covered by SRE 2410. If you see, they have specified also here SRE 2410. We will come back to this particular report when we will discuss in detail SRE 2410. But as of now, we will first start with SRE 2400. That is the engagement to review historical financial information. Again, it is a review, means limited assurance. So when I talk about SA, I'm talking about reasonable assurance. When I'm talking about SRE, I'm talking about limited assurance. When I'm talking about SRS, I'm talking about no assurance. Understand the difference. So SRE falls somewhere in between the SA and SRS. So the review engagement basically falls in between the audit and agreed upon procedures. Clear? Okay. When I talk about SRE 2400, it is the engagement to review historical financial information. You can say it's a kind of a generic SRE which covers review of all historical financial information. But when I talk about 2410, it is more specific because it includes your interim financial information, first of all. Second, it has to be done by independent auditor of the entity. So two important things to fall under SRE 2410. That is one, interim financial information. Second, independent auditor of the entity. But when it comes to the other review engagement with respect to the historical financial information, it will go under SRE 2400. Okay. Now, basically, when I talk about review or obtaining limited assurance, how do we obtain limited assurance? There are multiple procedures, audit procedures. Okay, when I talk about audit, we have multiple audit procedures. What is audit procedure? Can anyone tell me or list down some audit procedures that we perform? Very easy. Audit procedures that you perform. Anyone? No? Basically, when it comes to the audit procedures, okay, it could be inquiry, it could be inspection, it could be observation, it could be your recomputation, recalculation, confirmations. Multiple procedures could be there. Combination of these. Correct? Now, when I talk about review, when I talk about limited assurance engagement, over there, I am talking about only review procedures, that is inquiry and analytical procedures. So in review, okay, I focus upon inquiry and analytical procedure. I perform these procedures, and on the basis of that, I conclude whether anything has came to my attention or not. Are you getting the point? So instead of performing all the procedures, I only focus upon inquiry and analytical procedures in a review. That's why instead of having an opinion, I give a conclusion. Again, you will see some changes in the terminologies over here, but here when I say conclusion in audit, it is opinion. Okay, so only inquiry and analytical procedures that I perform, and instead of opinion, I use the word conclusion. These are the limited procedures for limited review, and I issue a conclusion instead of opinion in audit. Clear with this? Any doubt? No? Okay, no issues. So, as I said, when I basically issue an opinion in this particular standard or in this particular engagement, my objective as an practitioner, again, the term I will use is a practitioner, not the auditor, because as I said, this is more general standard, means it can be performed, not necessarily that the person who is performing should be independent auditor. No, the person can be a practitioner who is not an auditor. So the objective of the auditor basically is to issue conclusion. Now, what kind of conclusion here we are talking about? The conclusion is that the financial statement as a whole are free from material misstatement, and that too by making inquiry and performing analytical procedures. So I am again saying that the financial statement as a whole are free from material misstatement. Okay, and this particular conclusion I issue by saying that whether anything has came to my attention that caused me to believe that the financial statement are not prepared in all material respects in accordance with the applicable financial reporting framework. That means that means is that if you do not identify any issue, you assume that they are free from material misstatement. I obtain limited assurance and I say that these are free from material misstatement because nothing has came to my attention that caused me to believe that the financial statement are not prepared in all material respect in accordance with the financial reporting framework. Now, one very important thing is I will highlight this particular line, this one. Understand this as a key term to remember. Okay, key term to remember that anything has whether anything has come to the attention of the auditor which is causing him to believe that the financial statement are not prepared in all material respect in accordance with the applicable financial reporting framework. One of the key terms that you should remember. Now, or you can say a statement that how limited assurance is issued. Clear? Any doubt? Any doubt till now? Okay. If no further doubts, then see, again, as I said, that this is an engagement of review engagement. So, being a review engagement, I have to comply with some of the requirements. I have to comply with the requirements. And when I say I have to comply with the requirements, that means SQC1 requirements, ethical requirements, professional skepticism and professional judgment, because whenever any type of assurance is coming into the picture, professional skepticism, professional judgment will always come. So if I say this is a review engagement, that means I have to comply with the ethical requirements, I have to comply with the engagement level quality control, I have to comply with the SQC1, I have to comply with the professional skepticism and professional judgment. Straightforward. So, compliance with ethical requirements and engagement level quality control, which includes your professional skepticism and judgment. With respect to the review engagement. Now, second thing is that when I talk about engagement level quality control, can anyone tell me what was the engagement level quality control requirement under SA 220? Okay, who was ultimate responsible for an engagement as per SA 220?
Sir, please repeat.
Engagement partners.
Hmm?
Engagement partners.
Absolutely correct. That is the same over here. Engagement partner is the responsible for overall quality of each review engagement. Because SQC1 is applicable, SQC1 says that engagement partner should, SQC1 says that a firm should have a policy that, that makes engagement partner responsible. And by that way, when you apply engagement level quality control over here, you make engagement partner responsible, overall responsible for your SQC, for this each review engagement. Engagement partner has to take responsibility for the direction, supervision, planning, performance, and compliance with the professional standards, applicable legal and regulatory requirements, everything. That is the responsibility of engagement partner. Engagement partner has to make sure the report is appropriate that is being issued. Plus, engagement partner has to obtain information that is necessary for the firm to decide whether to accept the engagement or not. For example, when it is the review engagement, again you are issuing assurance. Again, although it's a limited assurance, I am issuing some kind of assurance. If I am issuing some kind of assurance, the conflict of interest, threat to the fundamental principles, everything again comes into the picture. So the way what we have discussed in the audit with respect to the acceptance and continuance of engagement or client relationship, the same way we have to check for the review engagement. Are you getting the point? So it is not different from the audit when it comes to the acceptance and continuance of the client relationship or engagement. So if any of the circumstances is present, okay, that is causing auditor or that is causing engagement partner, that okay, there would be a threat to the fundamental principles, or there would be a threat that the audit opinion might be biased, there could be a conflict of interest. In that case, he should decline the engagement and he should not accept. So whenever engagement partner thinks that it is not appropriate to accept the engagement, he should decline the engagement. It is the responsibility of the engagement partner. Let's say, for example, if there are scenarios where you cannot decline the engagement. There are scenarios where you cannot decline the engagement, okay, and still you want to continue, or still clients ask you to continue the engagement even though you have a conflict of interest. What you will do?
Like we also studied in SQC1, we have to apply some other safeguards so that threat will be reduced to an acceptable level.
Yes, very good.
Like appointing another engagement partners or seeking for another firm to do that engagement on one of their.
One more thing that you can do is that you can ask management to convert the engagement. When I say convert the engagement, that means convert it from your SRE engagement to SRS engagement. Ask management that okay, please agree to having an engagement without any assurance, that is agreed upon procedures. Over there, independence was not mandatory, remember. So you may ask management, okay management, if it is possible for you to convert this engagement into agreed upon procedures where I will not be issuing any assurance, will that be fine for you? If they say yeah, okay, fine for us, in that case you may convert that engagement, and rather than performing a review engagement, you may perform a agreed upon procedures. Another thing that is here, that if whenever you are undertaking a review engagement, you have to make sure that why this engagement is being undertaken or whether the review engagement would be appropriate. That means that whenever a review sorry, whenever a review engagement is there, what happens that, like let's say for example, in a review engagement you issue a limited assurance, fine. Now sometimes review engagement are to be undertaken due to the law requires, let's say for example, quarterly results. Now you need to go and check whether the review engagement would be appropriate, means whether the law is requiring a limited assurance or absolute your reasonable assurance or absolute assurance. For example, instead of getting annual audit, what if I ask auditor to perform an annual review? Instead of getting annual audit, what if I ask auditor, okay, don't do audit, just perform review, I'll submit that report? Do you think that is appropriate?
No.
No. Do you think you can change the reasonable assurance engagement into a limited assurance when the law requires specifically the reasonable assurance? No. Okay. If we cannot, then we have to make sure that whenever we are accepting limited reviews or limited assurance engagements, that is the review engagements, over there, what happens is that we have to make sure that the law or whatever, based on whatever thing we are issuing the report that requires limited assurance, not more than that. Otherwise, it will be a problem. So you need to check for the rationale or the purpose of that particular engagement. Why we want to carry, or why client is asking us to do a limited review, because it is a limited assurance. Is it required by law, or whether the law requires some other kind of assurance? And if that is not appropriate, then engagement partner should decline. So that is the responsibility of engagement partner. Okay, clear with this? Any doubt? Okay. Before accepting any review engagement, you have to make sure that the review engagement is appropriate. Okay. So whenever I'm going to accept a review engagement, I need to make sure that, okay, the engagement is appropriate and I can accept this review engagement. Now, what that means, that review engagement is appropriate. Okay. So to be a review engagement, or to call a review engagement that, appropriate one, I need to check certain things. Review engagement is appropriate when number one, that the practitioners, based on the practitioner's understanding, based on the circumstances, based on the information that I have obtained as a practitioner, based on the CNA procedures, based on CNA procedures, nothing has came to the attention. That is, I have not identified any threat to fundamental principles. Or based on CNA procedures, I don't think it is inappropriate to accept the engagement. So no threat identified. Number two, rationale is appropriate. Okay, the rationale or purpose is appropriate. Third, it is, when I say appropriate, that means it is not causing limitations on the scope of the work. Okay. Third, that practitioner's name is not going to be engaged, or is not going to be used in an inappropriate manner. So practitioners name is not going to be associated in inappropriate manner. That means For example, my name will not be included in places, kind of giving impression that I have done an audit instead of limited review. And fourth, engagement is designed or intended to meet the requirements of a law, or you can say some regulation. So engagement is as per law or regulation. Then only I can say, okay, this review engagement is appropriate. Otherwise, I can. If I conclude that the review engagement is not appropriate, in that case, I cannot continue further. After having this review engagement is appropriate, I need to check for preconditions. Remember preconditions of an audit? Yes or no? Preconditions that were there in the audit. Anyone? Yes? Which were the preconditions? Yes or no? What was which were the preconditions that you remember from the audit? Nothing?
Sir, firm assign its management responsibility so that the commercial consideration do not override the quality. And we also think about the performance evaluation, compensation, and overall commitment to the quality. And we also think about whether we have sufficient time and resource availability or not. We also check whether the client is objective and integral and is not having any independence threat. In that case, we proceed on to accept that engagement.
Yes, very good. Very good. So these are the conditions that we check. Okay, that are the preconditions. Again, review engagement is appropriate. Something is similar to the preconditions, but preconditions are more. Number one, that is again the rationale that I check in the precondition. What is the rationale behind my review engagement? Number two, CNA procedures outcome. Number three, ethical requirements. If there is any issue with the ethical requirements, or including independence, because independence is necessary over here. Four, you can say my doubt about management's integrity. Fifth, you can say that limitation on scope. These are the things that we have already seen in our review engagement is appropriate. So this is nothing new that is coming, which is only coming from here. Okay. Now, beyond that, very important part is number one, determining your financial reporting framework. Okay. Which is the acceptable FRF. You have to determine which is the acceptable FRF. It could be special purpose, it could be general purpose. So understanding of FRF is very, very important. That is a prior requirement before accepting a review engagement, that you have to determine which is the acceptable FRF. Number two, obtain agreement from management. Now, agreement regarding what? Agreement regarding their responsibility for preparation, okay, for preparation and presentation of financial statements, for internal controls, for providing all access information and documentation. So providing access information, documentation to practitioner, okay. So these are the preconditions determining acceptable FRF, obtaining agreement. If any of the condition is not there, in that case we cannot accept the engagement. Are you getting the point over here? What are the preconditions? It is similar to what we have seen till now under SA 210. So something similar which we have discussed under SA 210. What was SA 210? SA 210? Anyone?
Agreeing the terms of engagement.
Over there you already have all these things, but in case of with respect to the audit, now we are just having these things with respect to the review. That's it. So the preconditions which are there are similar to the preconditions we had in audit. Okay, so it is similar to SA 210. Okay, any doubt till now? Any doubt? No? Okay. After 210, okay, we talked about quality 220, SA 220, but again, in terms of review engagement, that is already we have discussed. What was the important essay after 220? Come on, guys. After 220, which was the important essay? Next.
315, understanding the entertainment environment.
Before that, there was one more. Like 2-3 more are there. After 210 or 220, there are more essays which are important with respect to an audit.
Planning.
Communication.
Yes.
To the management and those charged with governance. 260, 265. Yes or no?
Yes, sir.
Same way, if you don't identify the preconditions, if you don't identify that okay, the conditions are available, in that case you have to communicate with the management, you have to communicate with those charged with governance, you have to discuss with them. So the practitioner should discuss these items with management, those charged with governance, okay, in order to resolve these matters. You have to provide same way, the way we have discussed in SA 260 or 265, that okay, whatever, if anything is to our attention that we need to inform to management and those types of governance, same will be applicable over here throughout the particular review engagement. It is not something that we will not communicate to management. No, we will just only let them know in the end. Communication will happen throughout the way it is there in 260 or 265. So again, communication. similar to SA 260 and 265. Okay, clear? Any doubt? Okay, then one important point that you need to understand in your report is, if, let's say for example, any of the thing is not present, any of the requirement of the SRE you are not able to comply with, okay, because of the circumstances, because of the scenarios. Let's see, it's a limited review engagement, I agree, but at times, the circumstances of the scenario becomes such that you are not able to comply with the requirements of the SRE. At that point in time, please do not include any reference of the SRE in your report, because SRE has not been complied with. So accordingly, if practitioner is not able to comply, or circumstances are such that he is not able to comply with the SRE, practitioner shall not include any reference in his report with respect to the SRE. Very important point. Okay. Then again, agreeing to the terms that we have already seen, this is as per your SA 210, nothing different what we have discussed till now. Written letter, written engagement letter, suitable written form should be there, terms should be agreed. Okay, whatever we have discussed till now, similar. Change should not be there unless and until justified. So change in the terms should not agree to the change unless there is a reasonable justification to do so. Whatever we have discussed in SA 210, same we are applying for the review. Clear? Very, very important part with respect to review is, your next point is materiality. Determine the materiality for the financial statement as a whole. That is your application of SA 320 with respect to a review. Now, this is very important point to understand, because see, when I say materiality in case of a review of a financial statement, okay, I am talking about a scenario where, I'm not doing or issuing an audit opinion, but I'm doing a review. Over there, materiality would change, because what is material is something that is, changing or affecting the decision making of the reader. If any of the thing which influence the decision making, economic decision making of the user, that is material, and that I have to understand from the reviews point of view. Some financial reporting framework do provide what is material, but when they do not provide what is material, I need to understand based on the influence, the thing that can influence the economic decision of the user. It is not that simple. It could be judgments, it could be, a lot of things. But at the end, what is material is has to be, determined from the reviews point of view, because our procedures are limited, our assurance is limited. The same way, materiality has to be of that particular level. Higher the assurance, remember there are certain terms or there are certain things that we have seen in the materiality. The more assurance we need, the more, if I ask you to complete the sentence, the more assurance we need, the more what we need to do. Complete this sentence. The more assurance you need, the more dash what you need to do. Anyone? No?
Obtain more audit evidence.
Yes, absolutely correct. So the more assurance you need, the more audit evidence you need. And to get more audit evidence, you need to have more testing. Correct? Now, lower the materiality, higher the testing level. Remember? Yes or no?
Yes, sir.
If your materiality is lower, you need a higher, you need, if your materiality is lower, you need higher audit evidence and you need to do higher testing. Correct with this? Okay. Now, when I say limited review engagement, means the level of assurance is low. The level of assurance is low means the evidence requirement is low. If the evidence requirement is the low, that means I can keep my materiality level high. Yes or no? So, materiality level, let's say materiality, if is lower, then I have a higher testing requirement. If my materiality is lower, then I need to test more. Yes or no? If my materiality is lower, I need to test more because everything will become material for me.
Yes, sir.
Okay. Now, if that testing more is means evidence more, if evidence more is means assurance is higher, everything is linked. Testing, evidence, assurance, they are positively correlated. And they are negatively or inversely correlated with the materiality. The more assurance you need, the lower the materiality you are required to keep. In the review engagement, I need assurance at the lower level. So the materiality level will be higher. This was for the audit. This is for the review. Clear with this? Yes, no? No? Not clear? I just only heard only one person. Jenny,
Yes,
Red.
clear.
So the current topic we are discussing is clear, but I am having a doubt over the last topic. There
Yes.
will that if practitioner is not able to comply with the SREs, then he should not include any reference in his report that
Yes.
he followed SREs. In that case, how will he frame sentences for his conclusion?
I'll show you one example. See, over here, we have written that we have conducted our review of the statement in accordance with the SRE. This particular line. Okay, issued by ICAI. If in case you are not able to comply with the SRE, do not mention this statement. Simple.
Okay, sir.
So only this statement will get removed. Then, because see, sometimes the review would require you to report in a certain way or to perform the review in certain way that is not in, in line with your SRE. So at that time, do not mention the reference to the SRE. Okay, clear with this? Okay. If no further doubts, what I'll do is let's take a quick 10-minute break, try to grasp whatever we have discussed, and then we'll continue the session. Okay, let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue the session. So we were talking about materiality. So we discussed about the materiality. Now, beyond materiality, the way we do in an audit, that is, we review the entity, we understand the entity, we understand its operations. Similar way, in the similar way, we have to do it for the review also, because in order to perform the review, let's say inquiry, let's say analytical procedures, you are required to have the understanding. The way we were taking the understanding of the entity under, in a case of an audit, it might not be at much at that level, but still you are required to understand the entity. Okay, so once you understand the entity, then only you will be able to perform the review or analytical inquiries. So understanding the entity, again, similar to your SA 315, that is applicable to review also. Then designing and performing the procedures with respect to inquiry and analytical procedures. Same way, the way we do in audit for all the procedures, here only design and performing the procedures for inquiry and analytical procedures, nothing else. So SA 330 kind of, but limited application with respect to inquiry and analytical procedures. Clear? Then once I do this, once I design and perform the procedures, I'll get the evidence. I need to examine, I need to evaluate the evidence. Okay, and based on that, I can draw a conclusion. Now, when I say inquiry, basically about what I need to inquire, that is very important to understand. If I talk about inquiry, then there are certain areas for which I am required to do inquiry. The areas for which you obtain audit evidence. So under audit, which are the areas for which you obtain audit evidence? Under audit, which are the specific areas for which you are required to obtain audit evidence? Anyone? Inventory, litigation, yes. So there is a whole series with respect to audit evidence, which is that one.
What's it?
500.
There is a specific whole series in essay with respect to audit evidence.
500 series, sir.
Yes, and which are the topics or which are the areas for which you are required to take or obtain audit evidence in that series? Pretty simple. Estimates, related party, going concern, subsequent events, inventory, litigations, opening balances. So all these things are there. Yes or no?
Yes, sir. Actually, question में थोड़ा उलझ गए थे.
Yeah. So basically, when you are obtaining audit evidence for these specific areas, in case of audit, in a similar fashion, you need to obtain review evidence, not the audit evidence, but the review evidence for these areas. So if I talk about these areas with respect to inquiry, means you need to perform inquiry for these areas, like estimate, similar to what you have for essay. Which essay was there for accounting estimate?
540.
540.
Yes. Related party, which essay?
SA 550.
550.
Yes. Then events occurring between the date of financial statement and practitioner's report, that's subsequent events.
SA 560.
Going concern.
570.
Yes. So, and contractual obligations, your SA 501. Okay. Like litigations, completeness, and completeness of the litigations or liabilities. So all these things which we have seen in audit, now we are doing from the point of view of review. We will perform inquiries only on in this area and analytical procedures. That's it. So it is not something different that we are doing, but whatever we were doing in audit, we are doing in a restrictive way. Are you getting the point?
Yes, sir.
As a result, so whenever I will talk about review, understand audit in a limited way is a review. So all the essays or concept, I would say, would be applicable over here. The similar concepts are applicable over here, but in a limited way. Again, when I talk about analytical review, analytical procedures, same on these areas, you need to perform analytical procedures, and that will give you the information. Be it related parties, be it your fraud and non-compliance, which is SA 240, going concern SA 570, all these things. Even you can you can use the work performed by others, which can be your audit expert, SA 620. Everything in the similar fashion will be applicable for review, in a limited way. Then once I perform all these procedures, whether it is like what do you say, SA 560 subsequent events or 570, I obtain written representations. SA 580 in a similar fashion of SA 580, I obtain written representations. Okay, once I do everything, then I come to the next point, that is analysis of my audit evidence. Okay, analysis of my audit evidence, which is your SA 450. Here I will call it as a review evidence. So whatever evidence I have obtained, I will analyze to conclude whether can I say that I can provide limited assurance or not, or whether is there anything that has came to my attention which is causing me to believe that the financial statements are not free from material misstatements. So I will analyze the evidence as per SA 540, but in a limited sense. So similar concept applicable in the limited review sense. And then I will conclude. Now, when I say I will conclude, so the way you have the audit opinion, here I will have a review conclusion. As I have already said, I will use the term conclusion, review conclusions. Okay. How many type of audit opinions are there?
Basically, two types, modified and unmodified.
Absolutely. In the similar fashion, you have review conclusions, modified conclusion, unmodified conclusion. Modified conclusion when you identify something, unmodified conclusion when you don't identify something. Only thing is that all the concepts I'm applying, but in a limited fashion. That's it. When I say unmodified conclusion, there is a specific wordings that I'm required to use. The para wordings. Okay. Remember, in case of modified opinion, there were certain wordings that I was changing in the paragraph when we saw the audit report. In a similar fashion, we have wordings for the modified and unmodified opinion. For unmodified opinion, the wordings which I showed you in example also, that based on our review, nothing has came to our attention that causes us to believe that the financial statement do not give a true or fair view, or do not present fairly in all material respect in accordance with the applicable financial reporting framework. Okay, this is the wording, or like this way. Based on our review, nothing has came to our attention that causes us to believe that the financial statements are not prepared in all material respect in accordance with the financial reporting framework. Basically, this is for the compliance framework, and this was for the prior presentation framework. So, wording is for the unmodified opinion. But when you identify something which is kind of, creating a modification, which is causing you to believe that there is a misstatement over there, I need to, report that. Can anyone tell me, what kind of scenarios can be there when I say in review there is a misstatement? Anyone? No? Okay, I'll tell you. So, when based on my review evidence, that is inquiry and analytical procedures, I identify that something is not reported appropriately, that would be a misstatement. And then I need to apply materiality level to understand whether this is a material misstatement or not. Let's say, for example, in a review, like I'll show you one example. Let's assume for time being, this is, historical financial information, not the, interim financial information. Let's assume this is historical financial information. Now, let's say when I was performing analytical reviews, I understood this particular revenue number, hypothetical example. This revenue number is misstated because a segment is missing. Or, for example, or a hypothetical example, let's go to the balance sheet. If there is a balance sheet available, okay. Yeah, if balance sheet is available, based on the analytical procedures that I performed, I identified that these provisions, do not contain provision for penalty based on recent notice, or you can say order issued. Okay, so let's say I was doing inquiry, and while performing the inquiry, I came to know about a particular, litigation going on where the high court or tribunal, ITAT, has issued a notice or has issued a judgment that, the assessee is liable to pay this much amount of tax and everything. So there is a penalty and everything is there in the picture. Now, in inquiry, I identified about that particular notice. Okay. When I was doing, analytical procedures, I understood that there was no provision created for such order. And hence, based on the review and analytical procedures, I was able to conclude that this particular number of provision is misstated. And let's say by applying materiality, I identified this is a material misstatement. Hypothetical example. So by this way, I can, by review and analytical procedures also, I can identify a misstatement, and then I need to evaluate whether that's a material misstatement or not. That is the first scenario. Can anyone tell me another type of scenario where I can say the effect or the possible effects are material? Or another scenario for the misstatement where I can say the, the effects or the possible effects are material.
Going concern assumption is not appropriate. Even then, the financial statements are prepared using going concern.
Yes, very good. Anyone else? what if management is not able to provide you the backup data, backup information, okay, about this particular current liabilities? That means no information was provided to you or no audit evidence was provided to you. Backup information is missing. And that is, I would say, material. Okay, that is material. Now, when any information which is material, which is not given to auditor, or auditor is not able to get any audit evidence, what kind of opinion do you issue?
Disclaimer.
Yes. If it is material, not pervasive, I will qualify. If it is material and pervasive, I will issue disclaimer for opinion. In a similar fashion, when it comes to the review, okay, these things are also applicable. Like if I determine that the financial statements are materially misstated, I will issue modified review conclusion. If I determine that financial statement, that the information which was supposed to be provided to me is not being provided to me, I'm unable to obtain sufficient and appropriate evidence, review evidence. So till now we were talking about audit evidence. Now I'm talking about sufficient and appropriate review evidence. Okay, so sufficient and appropriate review evidence is not available. In that case, again, I will issue a modified conclusion. Now the question comes is, can I use the terminology that was there in the audit, like, modified qualified conclusion, adverse conclusion, basis for qualified conclusion, basis for adverse conclusion, or basis for disclaimer conclusion? Can I do that? Answer is yes. The similar thing will be issued over here also, or used here also. So qualified conclusion, adverse conclusion, disclaimer conclusion, and their basis is required to be mentioned over here also. I can use these headings, perfectly fine for me. When it comes to the conclusion, I can use these settings. Clear with this? So qualified conclusion, adverse conclusion, disclaimer of conclusion, along with your basis is required to be mentioned over here. Similar, what I have seen in your essay 700, 705. In the similar way, it is over here. If the impact of the misstatement is material and pervasive, adverse. If it is only material, qualified. Unable to get audit evidence, unable to get evidence, sufficient and appropriate review evidence, then material. Impact, material and pervasive, disclaimer of conclusion. But I'm using the term conclusion. Remember that. Everywhere the term is conclusion, not opinion. Because of a limited review. And your wordings will change accordingly. For example, if you want to issue a qualified conclusion, okay, remember in qualified opinion, what we were used to do is based on the evidence collected, and we have received all the information and explanation, except for the matters specified in basis of qualified conclusion paragraph, we used to provide our conclusion, yes, in qualified opinion. So basis, we used to mention that except for this, everything we have obtained, and that is fine. In a similar way, we do it for your conclusions also. So for example, when it comes to the conclusion, we say that except for the effects, or except for the effects that is described in the basis for the qualified conclusion paragraph, nothing has came to our attention. Or except for the, you can say, effects of the matter described in the basis for conclusion paragraph, nothing has come to our attention that causes to believe that the financial statement are not prepared in all material respect. The way we used to have the wordings for the qualified opinion, that is a qualified conclusion here. The way we used to have the wordings for the adverse, like, okay, basis on the evidence obtained and basis on the all the information and explanation, we conclude that the financial statement are not prepared in all material respect in accordance with the applicable financial reporting framework. Same over here. If you see, based on our review, due to the significance of the matter described in the basis of adverse conclusion paragraph, financial statements are not prepared in all material respects in accordance with the applicable financial reporting framework. This is for your adverse conclusion. And similar way, you have your basis of disclaimer conclusion. Because of the following matters, we are unable to obtain sufficient and appropriate review evidence, and on the basis of that, the wordings will be there. Clear? Any doubt with the type of conclusions, the wordings of conclusions, and the way we have the conclusion in the review? Any doubt?
सर क्या एग्जाम में यानी ये पैराग्राफ फ्रेम करने को भी आ सकता है?
For audit, yes. For audit.
Okay, sir.
Any other doubts? Okay. If no doubts, then now we will understand, we will get another understanding of the how the report is structured, the way we saw the report in, agreed upon procedures, the minimum content of the report. Similar way, we will see a report over here. Because at the end, report is required to be issued. Although it's a, limited review, but limited review report are required to be issued. So we will see how the report is drafted. So basically, when it comes to the report, similar fashion, you have a title, you have addressee, you have introduction paragraph, which includes your, the financial statement, summary of significant accounting policies, okay, that you have performed a review of the financial statements. So an introduction paragraph. Then management responsibility. Okay, what is the management responsibility with respect to presentation and preparation of the financial statements? If financial statements are special purpose, based on special purpose framework, then you need to describe that special purpose framework. So special purpose financial statements are there, then you need to describe that. Okay. Post that, you need to describe the practitioner's responsibility. The way we used to have auditor's responsibility, now we will have the practitioner's responsibility. Then you need to describe that this is a review engagement. Okay. limited assurance engagement. So you need to explain about review engagement, that it is a review of a financial statement, that it is a limited assurance engagement. We only conduct inquiries, we only conduct analytical procedures, we do not conduct anything else. And the procedures performed in a review are substantially less than those performed in the audit as per essay. This is a very important statement that we mentioned. Okay, the procedures performed in a review are substantially less than those performed in an audit conducted in accordance with the essay. And accordingly, the practitioner does not express an audit opinion on the financial statements. So these kind of statements are required to be mentioned in your report, the way we have seen in AUP, that is agreed upon procedures. Okay, so review of financial statement and your limitations, whatever limitations are there, those statements are required to be added. These are the kind of limitation statements. I call it review and limitation. Then it comes, the important paragraph is a conclusion. What was your conclusion, whether modified, unmodified? You need to specify that. In your conclusion, you need to specify about the financial reporting framework that is being used to prepare the financial statement. And we usually do that. If I show you an example, see, if you see this particular paragraph, this is the conclusion paragraph. Now the thing is that if you see this particular line that laid down in India's 34, prescribed under section 133 of the Act, India's 34, regulation 33 of SEBI listing regulations, this is nothing but we are identifying the financial reporting framework. And we do that in each and every, even if you take audit opinion, we identify the financial reporting framework when we issue the opinion. So that is in the similar lines. What we have seen in the audit is a similar way in the conclusion also. Then if your conclusion is modified, okay, then you need to provide the description of the matters, okay, the detail about the modifications. What are the modifications? Why your opinion is modified? Then your reference to SRE and ethical requirement over here, reference to SRE. Then date, signature, and place. Date, signature, and place. That is DSP. So this is how your report is structured when it comes to the review engagement. Clear? Any doubt? Any doubt? No? Okay. If no further doubts, this was your structure. And basically, see, very important is that you understand the limitation paragraphs that are required to be, mentioned in this particular report. Now, no one asked me about EOM paragraph or OM paragraph, the paragraphs we have in audit report. Can we have EOM paragraph and OM paragraph over here? Yes, no?
Yes.
And what about other information? Let's say, for example, your review report is, let's say in this case, okay, this is particularly your review report, but in this particular, review report or the document which is being issued, there is some other information also mentioned over here. Something other information might be, not related to the review that you have performed, but there is other information also in this document. So in that case, what is the auditor's responsibility with respect to other information?
In case of this review engagement, he has to make sure that other information is not presented in such a way that it reflects that the review has been performed on such other information also. So he will request management to show it on other place so that users will not get confused upon it.
Yes, very good. Absolutely correct. So in that case, you need to understand how your information is being presented. Okay, whether this information is presented to appear that it is a reviewed information or not. In the similar manner, you need to, distinguish between the review and non-reviewed information. Okay, and for example, if let's say there is one requirement, let's say some law requires you to report something more than what SRE says, then what you will do? So something more reporting is required than the minimum SRE we have seen. Where you will report some specific area which law requires you to do. Where will you report? Okay, where you used to report those things in your audit report. Specific areas that law requires you to report. Where you used to report in audit?
Other reporting responsibilities or other matter panel, other information.
There was a other legal and regulatory reporting.
Yes, sir.
Yes. In a similar way, you will report under that paragraph, report on other legal and regulatory requirements. So EOM, OM, other legal and regulatory requirement paragraph, everything will be here also if required. So if you require EOM, you need to comply with that requirements. You can have a EOM paragraph. If you want OM, you can have OM paragraph. If there is any other legal reporting requirement, you can have that paragraph, other legal and regulatory requirement under which you can report. Similar what we have seen till now in audit, but applied in a restrictive and unlimited fashion. That was your SRE 2400. That what we have seen just now, that is SRE 2400. Any doubt till now? Any doubt? No? Clear? Okay. If that is clear, then it won't take much time to understand SRE 2410, because it is built up on the same structure, but it is specific to a particular scenario. Okay, let us see quickly SRE 2410. Now, when I talk about SRE 2410, here again, in a similar way that we used to do in the 2400, the objective is similar. That here just the review is being performed by the auditor, independent auditor of the entity. Okay, here the auditor is engaged in performing the review, and opinion is issued by, or conclusion is issued by, that auditor. So here auditor will review the interim financial information to express a conclusion that anything has come to auditor's attention that cause him to believe that the interim financial information is not prepared in all material respect in accordance with the applicable financial reporting framework. So here, instead of practitioner, I will use the term auditor. Instead of historical financial information or financial information, I will use the term interim financial information. Are you getting the point? Apart from that, there is hardly any change than what we have seen in 2400. But yes, there is something we need to understand throughout the SRE 2410 engagement or limited review engagement for entering financial information is number one. This particular person is auditor, means he will audit the complete set of FS. Here is the auditor I'm talking about. So any which ways at the end of the year, he is going to audit complete set of financial statement. Yes or no? So to perform this particular audit engagement, he will do CNA, he will undertake engagement letter, he will undertake compliance with the ethical requirement, he will comply with the independent requirement. So tell me one thing, if he is going to comply with all these things for the complete set of financial statement or audit of a complete set of financial statement, is he required to re-perform everything again for the review of historical financial for entering financial information? The question is, he is already going to perform all these steps for the audit of financial statement because he is the auditor and he is only going to perform the review of interim financial statement. Now tell me, is he required to perform each and every step again for the review? Yes, no? Should he perform again everything like CNA procedures, engagement letters, complying with ethical requirements, independence requirement, understanding the entity?
So if actual circumstance demands so, he would have to re-perform.
Okay. Now, let's understand with an example. Let's say you are auditing a company which is 10,000 crore company. Okay. You have been appointed auditor of a listed 10,000 crore company. And I'll take it over here. Listed entity, ABC Limited. Okay. Rupees 10,000 CR revenue. Very big company. Very big. Okay. Appointed you as an auditor. Plus, you need to audit FS. You need to review quarterly financial statements because it's a listed entity. Now, you were appointed on, let's say, 30th May 2023. Okay. You started your audit start. Let's say you started after a month. Let's say 30th 6 2023. You started your audit. See, it's a very big company, 10,000 CR company. I will not start audit after, year end. That will be too late for me. We will perform audit in phases. Remember something, interim roll forward that we have seen in SA 315, 330? Yes or no?
Yes, sir.
Yes. So I will start my audit early so that I can complete the audit in the required time, because for the listed entities, you have very tight deadlines after the year end. So now let's say you started the audit, you got all the understandings and everything you were required to do. And on 15/07/2023, you have a limited review reporting deadline. Again, you have a limited review reporting deadline on, let's say, 15/10/2023. LR, another LR is there on 15/01/2024. Now, in these dates, your audit is already going on. You will be taking understanding of the entity, you will be taking all the documents, you will be performing the audit. Any which ways, if there will be a change, you will also go through that particular change. You will understand the internal controls. You might perform interim testing of those controls. So at that point in time, you are also doing audit, you are also doing a limited review. So whatever activity am I performing, can I use that activity for the limited review also? Or I need to do again separate activity for limited review?
Can use, sir.
That is a point we need to understand, that I can leverage the audit evidence that I have obtained while performing the audit, annual audit. See, because when I'm doing a limited review, I am already also doing an audit. Let's say at this particular stage, my audit might be 5%. Okay, at this particular stage, I understand I will not be having that much information of audit, or I might not be having that much information available with me which I can leverage. So I need to perform separate procedures for limited review. Agreed. But at this stage, my audit might be at, let's say, 45%, or at this stage my audit might be at 75%. In that case, when I have such evidence available, when I have such information available, I can use that information. I can leverage that information. Even when I will plan for the audit, I will plan the audit in such a way that I get the information for the limited review also. No need to perform two different procedures again and again. I will not go and perform the inquiry for the audit, and I will not go to perform for inquiry, limited review again. Like, okay, today I'm doing the inquiry. Okay, no. Not tomorrow I'll do an inquiry for limited review. No need for that. Your single inquiry will cover everything for the limited review procedures also, for your audit also. So the understanding obtained for the audit will also be used for your limited review. Yes, you might be able to perform some additional procedures, because here audit is only 45%. Here it is 75%. But you have to issue limited review report on full numbers. Okay, beyond which there might be some areas where you might have not done audit yet. So for those areas, you have to perform limited review. Okay, so you need to understand that you are the auditor. At what stage your audit is? Can you leverage the audit evidence for the review or not? So if you have that information, if you have that audit evidence, you can use that audit evidence as a review evidence. Perfectly fine. If you don't have, then you need to go again, perform review, get the review evidence. And when I say review evidence, is nothing but the inquiry analytical procedures that you will perform.
Then how many times the review is going to be done? You have told the due date for the review. That's why I'm asking this.
See, this particular review I'm talking about as per SEBI regulations. Okay. Remember this example we were seeing over
Yes,
here.
yes, sir.
So regulation 33 requires you, or that you need to submit your limited review results under regulation 33. of
Yes.
LODR regulation. Now, this is as this particular information is, I think, of September, September review. So quarterly reviews are required to be carried on.
Yes, sir.
Your so 4 reviews at least you can consider, interim reviews that
Yes.
will happen.
Okay, sir.
But again, that is one particular law that I'm talking about, Regulation 33. There could be multiple regulations, multiple laws. Let's say, for example, some other law tomorrow comes up with respect to insurance, which requires you to, have a review half yearly. Some might have monthly. I'm not sure. So that totally depends upon the law or the type of engagement. And whenever you are, as an auditor, you are performing a review of interim financial information, you have to comply with SRE 2410.
Okay, sir. Thank you, sir.
Yeah. Any doubt till now? Again, when I'll repeat again that when I'm doing a review, all the things that I'm doing or following for the audit in a similar fashion. See, in this particular example, if I'm independent for audit, there will be hardly a chance or hardly a scenario where I will say myself, okay, I'm not independent for the review. Or if I'm complying ethical requirement for the audit, I might say, I'm not ethically compliant for the review. Hardly any chance. Okay. So, but in a similar fashion, if I agree the terms for the engagement for audit, simultaneously I'll get it agreed the terms for the limited review also. So similar way, SA 210 will applicable over here also, but in a limited sense. Then you need to agree. Understanding the entity, same. If I'm applying SA 315, I can leverage that information. You can say the concepts of SA 315 you can apply over here also. Then same, understanding the entity, its environment, internal controls, last financial statements, accounting policies, accounting estimates, everything that you understand under SA 315, same you have to, go through over here also. Okay, you need to perform inquiries and analytical procedures that we have seen in SRE 2400. Same way, I will perform inquiries and analytical procedures, which may be on related party, which may be on your contingent liabilities, which may be on your accounting estimates, which may be on your going concern, fraud. All those things will be here. Subsequent events after the interim financial reporting period. So my subsequent events will be till the date of, date of interim financial statement and the date of auditor's report for the review report, basically. So that will be my subsequent, events, litigations and claims, everything that I have seen till now for the, limited review in SRE 2400. In a similar fashion, it will be applicable over here. In a similar fashion, in a limited way, that will be applicable over here. The way or the detailed audit that I was doing, okay, in case of audit, the detailed procedures that I was performing, now I'm not required to perform those detailed procedures. I'm only required to perform inquiry and analytical procedures. That's it for the review. Again and again, I will not perform confirmations. I will not perform recomputations. I will not perform recalculations. Okay, analytical procedures can be there, but recomputation, reperformance, observation, inspection will not be there. For example, one of the example was, okay, when it comes to the going concern, what I used to do is I used to perform the going concern assessment as a standalone for me also. Like as an auditor, I also used to perform a going concern assessment of entity. Yes or no? SA 570. Management used to perform. Then I was also performing at my end, just to understand whether the assessment done by the management is correct or not. Yes or no? Remember SA 570?
Yes, sir.
Now, when I talk about review, I'm not going to reperform that. No, I'll only do inquiry. Management, tell me about your plans. Have you performed the assessment? I'll only talk and I will only look into the inquiry. I'll not reperform. And I'll check for the disclosure in the financial statement. That's it. So, for me, under the review, I will not go and check the feasibility of the outcomes, and I will not reperform the assessment again. I'm only doing inquiry and analytical procedures. Unless and until something comes up to you in your inquiry or analytical procedures, unless and until something you identify, you will not go beyond inquiry or analytical procedures. Okay, if something comes to you, if something you identify that, okay, some situation is there, some misstatement is there, something is missed, that you identify, no, that requires further understanding or further evaluation, then only you will go ahead, otherwise you will not. Clear? Any doubt? Whatever evidence I will gather in a similar fashion, I will apply as a 540, but from the limited reviews point of view, and I will evaluate the outcome. I will evaluate what kind of outcome I'm getting by analyzing these evidence. I will obtain management representation. That is the way I used to obtain for the audit. Similar fashion, I will obtain management representations over here also. So that will be your similar to application of SA 580, management representations. Then again, if you identify if there is any other information with your report, okay, let's say for example, in the interim, with the interim financial statement, management is also attaching some other information. The way we have seen SA 720, that is, you are required to check for the material inconsistency between your reviewed financial statement and the other information, or in audit we have seen for the audited financial statement and the other information. Similar way, I will check for the material inconsistency between the interim financial information and other information. Okay. So if I identify material inconsistency between the interim financial information and other financial information, I will ask management to make the amendments. If management agrees, fine. If does not agree, then if I have not issued the report, I will specify in my report about the material inconsistency. Similar way, similar what we have seen in SA 720. Communications, then the way we communicate with the management, similar way we'll communicate over here also. 260, 265. Similar fashion, nothing difficult. We talk about modification of the report in audit. Yes, we will also talk about modification of the conclusion over here. Possibility of withdrawing from the engagement, possibility of resigning. So there are those things that we have to comply. Okay, that we have seen already in audit. Same on a similar fashion, but restricted to the limited review, they will be applicable over here. Now comes the very important part, is your report. We already seen some portion of the draft report, some portion of the report which is available in the public domain. But let's understand the content of the report first, and then we will go back to that particular one. What is the content? What is involved in the report? Basically, you have a title. Okay. You have addressee. You identify the interim financial information. Identification is there. Okay. Then you specify about the interim financial information, that it comprises of the general purpose financial statement prepared in accordance with the financial reporting framework or like this way. Then you have the management responsibility. You have the auditor responsibility. You have the statement that you comply with the SRE. Okay. Compliance with SRE. Then you specify that the review is lesser in scope of the audit. Okay. And you specify that, okay, it is, we are not issuing any audit opinion over here. Basically, limitation paragraph, remember? So you specify that limitation paragraph, and then you have a conclusion in your report. Whatever conclusion we have, whether we have identified, whether we have not identified, or whatever we have, that conclusion we will specify in our report. Okay. And then you have the date, place, signature, DSP. So this is how your report is. Now, we need to understand few more things with respect to the report. But before that, I'll take you to the report. We will read the report and we will see that how, or in what way it is similar to the minimum content. First of all, you have a title over here. Again, remember, see, in SRE 2410, the SRE itself says that it has to be by independent auditor of the entity. Okay. If I show you the title itself, so it says that review of the interim financial information performed by the independent auditor of the entity. When your title only has independent auditor of the entity, in that sense, you need to have that particular term independent in your title also of the report. That's why you have an independent auditor's review report on whatever your financial statements are there. Okay. And as per whatever regulation. So this is your title. These are your addresses. Then the next paragraph was identification of your financial statements, interim financial information. So this is the identification, is the third paragraph. Now let us see the identification over here. See the identification. We have reviewed the accompanying statement of standalone unaudited financial statement or financial results, not even statements, results of this particular company for the quarter ended this, and the year to date results for the period April to September being submitted by the company pursuant to the regulations, whatever it is. Important thing is, if you see over here, they are talking about statement of standalone unaudited financial results. They are specifying this is unaudited. This is not audited. Although we are performing the review, we have reviewed, but still this is unaudited. The difference between review and audit. Then they are identifying the period over here and this period also over here. So usually in your limited review reports or the financial results, you have multiple periods involved. I'll show you that. Okay, so that was the identification of the financial information. Again, they are using the term not statement, but the results. Okay. Then you have a next paragraph which is, specifies about if it is a complete set of general purpose financial statement, then you need to provide that, okay, what is the financial reporting framework that is being used. Okay, this is financial reporting framework about. But here in our case, basically this is not the complete set. It is the financial results only. You don't have cash flow statement. You don't have other statement of changes in equity. You only have some financial results. That's why they are saying in pursuant to the regulation 33. This is your financial reporting framework. Over here. Okay. Then you have management responsibility. That what is the management responsibility? Management is responsible for presentation and preparation. See over here. The statement, which is the responsibility of the company's management and approved by the company's board of directors, have been prepared in accordance with the recognition and the measurement principles laid down in Ind AS 34. That is interim financial reporting, prescribed under Section 133 of the Companies Act and other accounting principles generally accepted in India in compliance with the presentation and disclosure requirements of Regulation 33. So they are talking about that, okay, responsibility of the company's management. They are saying this is the company's management responsibility and approved by the company's BOD. They are identifying whose management responsibility. Then see this one. You have auditor's responsibility. Auditor is responsible for expressing a conclusion only. So, similar fashion, you have this line. Our responsibility is to express a conclusion on the statement based on our review. This is management responsibility. This is auditor's responsibility. Then the next paragraph was with respect to the compliance with SRE and limitation para. Okay, compliance with SRE and limitation para. If you see over here, this is compliance with the SRE. Para that we have already seen, that we conduct our review of the statement in accordance with the standards on review engagement SRE 2410. Okay, the name issued by ICAI. And this particular part is basically your limitation para. A review of interim financial information consists of making inquiries primarily of person responsible for financial and accounting matters and applying analytical and other review procedures. A review is substantially less in scope than audit in accordance with the standards on auditing specified under 143.10 of the Act, and consequently does not enable us to obtain assurance that we would have become aware of significant matters that might have been identified in an audit. Accordingly, we do not express an audit opinion. Limitation paragraph, where they specify that, okay, it is a limited assurance engagement, not an audit. Okay, and then you have your conclusion based on the review. Nothing has, if you see this particular line, based on our review, nothing has come to our attention that causes to believe that this accompanying statement prepared in accordance with the recognition and measurement principles include in the manner which is disclosed or it contains any material misstatement. So kind of, unmodified opinion over here that has been issued. Then you have one more paragraph. Okay. That is, if something is is there to your attention, okay, is something has been identified, then you need to specify that. Or If this audit is being conducted by someone else, then you need to specify that. I'll show you. For example, here, the review of the standalone unaudited quarterly and year-to-date financial results for the period ended 30th September 23. An audit of financial results for the year ended 31st March 2024 included in the statement was carried out by some other auditor who has expressed unmodified conclusion. Okay, with their review report of this and unmodified opinion on their audit report of this. Our conclusion is not modified in with respect to this matter. Remember this point that we have already seen in SA 706, other matter paragraph.
Yes, sir.
Plus there is one more area. There was one more essay involved.
Using work of another auditor.
That is for the 600 when you have a component and principal relationship. But there was one more essay which was involved. Come on, guys. No? Which essay asked me to report in other matter paragraph? This particular point. There is one essay which asked me to report this point in other matter paragraph. I think you guys are not practicing that much. So essay 706 is the other matter paragraph, but predominantly it is essay 710 plus your 706. Remember 710, that prior period financial statement audited by predecessor auditor. In that case, you need to specify in other matter paragraph the financial statement of prior period were audited by predecessor auditor, type of opinion that has been issued, if it was a modified opinion, the reasons, and the date of the report. SA 710. Comparative informations, corresponding figures, and comparative financial statement. Yes or no?
Yes, sir.
Yes, sir.
Based on that only, we are issuing on a similar fashion we are doing for the review also. Because in our review, some information was audited by another auditor. We are applying same concept but for the limited review. If you see the report over here, you have 2024 numbers which are audited or reviewed by basically this auditor, current auditor. But when it comes to the previous, that is the corresponding figures. And this particular one, corresponding figures, where I don't have any opinion, but the numbers are there for the comparative purpose. If that has been audited by some other person, some other auditor, I need to specify. Clear with this? Any doubts? Any doubt? Tell me one thing, whether UDIN is mandatory for review report.
Yes, sir.
Yes, UDIN is mandatory for the review report. You have the UDIN necessary. UDIN is available or applicable on all the assurance and attestation functions, even including the non-assurance agreed upon procedures. Then how it can, we can exclude the review. Okay, so UDIN is applicable basically. And if anywhere, if you are not able to comply with SRE 2410, please specify that, you do not include the paragraph that you have complied with the SRE 2410. modifications, everything the way we have discussed till now, it is the same. Clear? Any doubt with respect to your SRE 2410? That was, review of entering financial statement information by the independent auditor of the entity. If I summarize what we have discussed is with respect to chapter number your 10, that is that when it comes to the review, it is the application of the concepts of audit only, but in a limited fashion. I'm not doing something different. I'm doing a limited audit. See, when I do an audit, I get the reasonable assurance, good amount of assurance. If I do a limited audit, I'll get a limited assurance. So that's the review. Any doubt again, guys? Any doubt? See, it is very important you understand these concepts. So don't worry on whether it is a silly doubt, whether it is something, very small doubt. No, don't worry on that. You can ask as many times as you can.
सर और कोई तो डाउट नहीं है, बट जैसा कि आपने पहले भी बोला था कि यानी जो भी क्वेश्चंस हैं उनके आंसर आप लिख के ट्राई कीजिए अपने वे में, बट जो आंसर प्रोवाइडेड रहता है उससे वो आंसर यानी काफी डिफरेंट हो जाता है.
Yes. That's why I asked you to write. Now, what you should do in this particular scenario, how you should bring your answer near to the suggested ones. See, focus on the key terms. I will again repeatedly, I will say you multiple times. Focus on the key terms, because if you will change any of the key term, your answer will, your explanation or your meaning will differ. I can write going concern assessment perfectly fine, but it is different than the entity's ability to continue as a going concern. So focus on those terms and accordingly try to answer.
क्योंकि सर उसमें जो आंसर दिए रहते हैं ना वो यानी एक सफिशिएंट, क्या मैं बोलूं, यानी ना ज्यादा बड़ा होता है ना ज्यादा छोटा होता है उस तरीके से यानी मेंशन किया हुआ होता है, और हमारा जो आंसर होता है वो यानी ऐसा लगता है कि एक ही वर्ड बार बार रिपीट हो गया शायद, या फिर उसकी वजह से थोड़ा लंबा हो गया, ऐसा लगता है.
If you are facing the problem that your answer's length is more, or what you say, if your content, see, there could be multiple issues when you write the answer. Number one, your answer is not on the topic. So that is something we need to understand the topic. What is the topic? What is the answer? What is the question asked? And accordingly, we need to answer. Yes. Second problem can be your answer lacks the keywords or the meaning that is required. So yes, that you will get that particular way of writing by understanding the keywords that you need to mention in your answer.
Yes, sir.
Third will be that you are repeating or you are rewriting what you have written every time. Okay, that is making your answer very big, or that is or increasing the length of your answer. First of all, understand that marks are not based on the length, first of all. Okay?
Yes, sir.
Now, the thing is how to provide the answer which is of proper words or proper, length. See, in each and every answer, when I say, answer with respect to any question, I'll just show you. Wait a minute. I'll also show you right now so that, you can understand what I'm saying. I'll pick up a random answer.
Yes, sir.
From previous suggested answers. Okay, I'll pick up one previous suggested answer. I'll pick up a random question and answer for the same subject. Okay, and then we will discuss. Give me a minute. Okay. These are the suggested answers. Okay. Now I'll come to a particular question or answer. Okay. See, this is your question on SRS 4410, or you have a question on SA 220. Basically, first of all, understand what is asked in your question. So here, what they are asking: suggest the ways of resolving difference between opinion of between two CAs. Okay. So you need to provide the ways over here. Means you need to answer the question that is given, like, okay, if this asks you the provide the way, then provide the ways, not beyond that. If it is something, something more, let's say this is SQC1, give your views on applicability of the SQC1. In that case, what you will do, you will talk about, okay, this is SQC1 basically. Okay, what is the requirement of SQC1? You will understand, you will quote the requirement of SQC1, and then you will conclude that, okay, in the given situation, whether this is applicable or not.
Yes,
Similar
sir.
fashion, I'll show you one more over here. Same way, if you see this one, going concern and significant uncertainties, SRE 2410, you need to provide what is the provision, not beyond that. Provision, okay,
Yes.
and then you need to conclude whatever your scenario is.
तो सर जैसे कि क्वेश्चन के अंदर अगर कोई सिचुएशन दी हुई होती है तो क्या हमें वो सिचुएशन को अपने आंसर में रिपीट करना चाहिए या फिर नहीं, या फिर सिर्फ आंसर ही लिखना चाहिए?
No. So let's say, for example, this hypothetical example, this big is the situation in your question.
Yes, sir.
Now, no one expect you to repeat the whole situation again. No.
Yes.
The key matters of the situation, which is linked to your problem, basically, is the one you need to write it. I'm
Yes.
not required to write PP Limited is a listed company till that time it is relevant. If it is something related to applicability or CARO or something like that, where the listing requirement of a company is relevant, then I need to write the company is listed entity. Otherwise, if the listing requirement of the company or the company's type is not relevant, there's no point of rewriting that.
Yes, sir.
So this is how you need to understand, okay, whether the particular item of the question is relevant for the answer. If yes, then write. If no, you can ignore.
Okay, sir.
And when it comes to the writing the answer, if you think you are repeating the sentence, okay, I would suggest focus on the approach that, it's more like explain the provision, what is relevant, explain the current scenario, what is relevant, and then conclude.
Okay, sir.
This is the best way you can answer a question.
Yes, sir.
Any other doubt, guys? Any doubt?
Thank you, sir. Now I will do like that and I will also try it also.
No, definitely.
Thank you, sir.
Yep. Any doubt, guys?
No, sir.
Okay. If no further doubts, I propose to keep the session till here. Okay. In the next session, we will continue with the next chapter, and I'll take some questions of this particular chapter also. So please revise it so that you can answer the questions. If you have doubts, bring your doubts. Perfectly fine. Okay. We will discuss the doubts if you have, and then we will start the new chapter, chapter number 11. Okay. Okay, guys. If no further doubts, then thank you for participating in the session. Happy New Year. I will see you in the next session.
Thank you, sir.
Yes, sir.
Happy New Year to you also, sir.
Yes.